The S&P soared 120 points off of the bottom in the last two trading days of last week. But is this just another lower high, or is this the beginning of the next weekly rally? Welcome to the ReadySetTrade Market Minute for Sunday, the 5th of March. All right, guys, here is the S&P 500 chart with the monthly time frame and the left-hand side weekly time frame in the middle. And here's the daily time frame. I really love this stuff because we are at such an important tipping point on the major indices at this point. It could literally go either way, and somebody's going to be really, really wrong here in the near future. This is why it's important for us to look at both sides of the coin and look at both sides of which way it could be going, and then set the price levels that will let us know which side is winning the war. And it literally is a war at this point. Okay, so here is one of the most important things. If we use fib analysis for this, so let's focus on the daily chart for right now, and we're gonna take the fib retracements from the very bottom of that CPI print way back in October all the way up to the early February highs. And we can see that the price came down to the 38.2% retracement of this entire swing. Okay, so far so good. That's not a big deal. But if we also take these fibs from the bottom in late December and draw a set of short-term fibs up to the very top as well too, and overlay those, now we can see how important that level was at that 38.2, and it lays out at a 61.8% retracement. That was about roughly 39.25 or so, within a point or two of that level. That is the abyss. If the price closed below that level, it was probably going to fill in the triangle, come all the way down to below 3,800. And that would have happened very, very quickly. And those were some very, very nervous moments that we had into Wednesday and Thursday of last week, as the price did literally like peer over the edge and look like it was going to tumble and take a toss. But instead, perfectly timed were some comments by one non-voting Fed member that drove the market much, much higher on Thursday, and then following up on Friday as well too. Now, what's the trend here? The trend is still an uptrend. We still have higher highs and higher lows in the weekly chart. So that is rule number one. Larger time frames dominate the trend. We still are in a monthly swing to the upside and a weekly uptrend. We can't just chuck that out and say, well, that's not convenient. That doesn't fit our narrative. It's still a very powerful swing. Okay, so, but rule number two says that reversals start from the inside out. So let's clean up all the fib stuff here. And this is where we could see a reversal. Again, I think it's important that we look at both sides of the coin here. While I think it would be, cool to have the price rocket above 4,200 on a massive slingshot move as the bears get completely baked, and we are basically printing a brand new bull market if that happens. But the flip side to that coin is if this just bounces up to this level here, or maybe just a little bit higher, and then rolls over again, can you imagine the bull trap that we're going to see? We're going to trap all those bulls and basically suffocate them underwater as the price drops like a stone. Now, what could cause something like that? Well, it could be Jerome Powell's testimony in front of Congress on Tuesday. That could be one element to it. Wednesday is usually a repeat of Tuesday. So he's testifying Tuesday and Wednesday in front of Congress, I do believe. And so usually Wednesday is just a repeat of Tuesday. So Tuesday is the big market mover. We also have the jobs report coming out this Friday. Remember, jobs was very, very hot, and this is what caused all of this mess back at the beginning of the month. All this uncertainty came with a very hot jobs report for January in the first week of February, right? So here we go again. Are we going to have another hot jobs report, which is going to make the Fed's battle to fight inflation literally impossible? So I think it comes down to this week. We've got all the energy in the world to power the next trend. Is it going to be to the upside? Is it going to be to the downside? The way that we can determine this is to zoom in on this area here. So I'm going to zoom in on the most recent price action over the last month or so. And we can draw fibs on these levels now too. So let's take them now from the top down to the bottom. So from the top to the bottom, we can see that we have now gone through the 38.2% retracement. So sliced right through that on Friday. So we might expect to see some potential reaction or resistance up here at 40.60, or maybe even as far as 40.93 at the 61.8% retracement. If the price gets over 4,100, more than likely it is going to go all the way to 4,200. However, if the price cannot get past 4,100, if we print some type of lower high, which cannot get above that level, then we're going to have to see whether or not that creates a lower high and rolls over again, which would indicate that the bears are still in command and the inflation hawks are still causing uncertainty in this market. It's going to be extremely pivotal what happens in the next few days. Join us in our live trading rooms and we'll talk about it every single day. That's it for today's Market Minute. Thanks for watching and we'll see you in the next one.